Hi, everybody. We continue to follow this news of the markets closing and clocking in the worst day of the year so far. Tumultuous day on Wall Street. The Dow falling, as you see there, about 890 points, or down a little more than 2% since the start of the day. We know the S&P fell 3%, or 187 points, putting it on track for the worst day of the year. The S&P also shed 3.1% last week. It was its worst weekly performance since September. And the tech-heavy NASDAQ was hit even harder. It was the worst day for NASDAQ since 2022, falling almost 9,000 points, or about 4.7%, after entering a correction last week. We know Tesla shares plummeted, so did Alphabet, Apple, Nvidia. A lot of this is being driven by uncertainty about tariffs and the future of the economy. Now, we did hear that President Trump on Sunday was non-committal about whether his policies will push us into a recession, and said it would be a period of transition. We know the job market is currently relatively strong, unemployment relatively low, but we also know that there is a current trade war going on right now between China, Mexico, and Canada. So let's go ahead and go now to CBS News senior White House reporter Weijia Jiang, who joins us now from Washington. Weijia, we have heard some of the president's surrogates, including Commerce Secretary Ludnick, being asked about whether some of the market reaction that we see will inform the president's trade policies. And he has sort of sloughed off any idea, just saying this is sort of the normal ebb and flow of the markets. Can you elaborate on that for us?
That's exactly what a White House official said just a short time ago to CBS News when we asked, what their reaction is to what we are seeing with the stock market right now. And they said there's a strong divergence between, quote, short-term animal spirits of the market and what we're actually seeing unfold from businesses and business leaders. And the latter is obviously more meaningful than the former on what's in store for the economy. And so the White House and President Trump are painting this picture of a booming, roaring manufacturing economy, especially for the United States, and how many jobs that will bring back, and, a lesser reliance on foreign goods. And, that takes time. And the problem, Lindsay, is while they say, there's going to be a disturbance in the meantime, we don't know how much of a disturbance. We don't know how much people might have to pay more in the meantime. And we don't know how long it will take for all these economic policies to be implemented. And so, what Ludnick said, what the president says is, yeah, there's going to be some disruption and a period of adjustment. But when you're the average American at home who is already struggling to pay the bills, that's the last thing they want to hear, right? That it could cost more for a period of time that, by the way, is unknown how long that will be. And so, top aides have also acknowledged that the president does pay attention to Wall Street. I mean, don't forget what he did for a career before he became president. He was a businessman in New York City. This is in his blood. But they insist, even though that's true, that's not the driving force when he is trying to make deals, when he is looking at the long-term picture for the U.S. economy.
So, Weijia, give me your pulse check on tariffs and what else we can expect. We know that there have been threats of tariffs and there have been postponements of tariffs, but we know that today Beijing is implementing retaliatory tariffs on a range of American farm products, a 15% levy on U.S. chicken, wheat, and corn, 10% tax on soybeans, pork, beef, and fruit. Ontario, Canada's most populous province, is adding a 25% surcharge to all electricity that they export to Michigan, Minnesota, and New York. And we know that the president is postponing tariffs on goods and products that are covered by the USMCA. That includes 38% of all imports from Canada, 49% imports from Mexico. What do we know is going to happen, or do we know yet, on April 2nd when that most recent 30-day postponement lapses?
So there's a lot to unpack there, Lindsay, because since we started to talk about this trade war, it's really been a focus on these three countries, China, Canada, and Mexico. And the president levied tariffs on those countries because he says they're not doing enough to combat the flow of fentanyl into the United States. So that's why we have 25% tariffs on Canada and Mexican goods, with the exceptions of those that you mentioned that fall under the USMCA. 20% tariff on Chinese goods. Okay, put that aside for a second, because when we're talking about April 2nd, those are global reciprocal tariffs that will be placed on a long list of countries. Now, exactly what those are and when they will be implemented, will it be staggered? We don't know. But those aren't going to be tariffs on sectors like an automobile sector or agriculture. Those are blanket tariffs on the entire country's imports into the U.S. And so those three countries, they'll be affected possibly with even more tariffs on their goods that come into the U.S., along with any other country that currently has a tariff on American goods. And so there is concern, Lindsay, because what we don't know is whether all those other countries are going to respond. And even though the White House says these are actually reciprocal for tariffs already on American goods, they could come back and say, well, we're going to respond to the reciprocal tariffs. And that's why global economists are so concerned. When you have a tit for tat and trade wars really start to bubble up and erupt, you're not talking anymore about the U.S. versus three countries, but the U.S. versus several other countries that are now going to put tariffs on American exports. So that's what we know is going to happen on April 2nd. They're going to start implementing those blanket tariffs on several other nations.
Okay, Weijia Jiang, thank you, as always, for helping me understand the current tariff web that is being woven. We appreciate you. Let's go to CBS News Money Watch correspondent Kelly O'Grady, who joins me now in Studio 57. So those are the reciprocal tariffs. But we do know that things with Mexico and Canada are not over. Can you explain what has been postponed until when and what that would mean?
Right. So, gosh, it feels like a year, but a week ago, 25% tariff was imposed on Mexico and Canada and a 10% tariff on Canadian energy. So the portion of goods that come from Mexico and Canada that are covered under that trade agreement that Weijia mentioned, so that is the USMCA, the United States-Mexico-Canada Agreement. It replaced NAFTA. That was in Trump's first administration. Those goods are covered. They are not subject to a tariff. But the goods that are outside of that, those are currently subject to that 25% tariff. Now, as we have been feeling and witnessing, all of these things could change daily. Those things could change April 2nd. But as of now, and of course, we also saw the automobile exemption. That's an example of something that's covered by USMCA.
And that's because the big three CEOs implored President Trump to exempt their imports.
Precisely,
right?
Precisely. Because what they were saying is, well, April 2nd, you're going to see these reciprocal tariffs go into effect on other countries. And so competitors like Honda and some of those others that produce and import from, let's say, Europe or Asia, they're going to have an advantage over these companies that are sourcing from Canada and Mexico, an advantage of about a month, because it would have been until April 2nd.
So help me understand what is going on in the minds of investors. Clearly, investors are spooked. The president says that tariffs are sort of the most powerful weapon available, sort of the easiest, most quick, most convenient way to get more favorable trade terms that the United States wants. He also has expressed that it is a negotiation tactic. So just like you said, we don't exactly know what is going to happen on April 2nd. But how are investors sort of taking those messages from the president? And how do we apply that to what we're seeing on the market?
So look, investors are looking at the landscape and there's so much uncertainty. And that is why you are seeing so much volatility across sectors. I mean, the hardest hit sectors today were technology, consumer discretionary, financials. These are very different sectors, but they are all subject to a decline in consumer spending. So what investors are looking at is there's a big question of what companies specifically will get hit hardest. If there's big tariffs on the European auto industries, the retailers might get hit hard. But what they're also looking at is, will these tariffs, will what you're seeing in the market decrease consumer sentiment, right? Because the data does not say that there is a recession right now. We talked about the jobs report on Friday. Unemployment is 4.1%. We're in a decently good spot. But you and I and everyone watching right now are feeling a little bit anxious. And so what investors are also betting on is that anxiety may translate into less consumer spending. And when consumer spending goes down, GDP goes down, and companies don't perform as well. So it's not only an uncertainty around when these tariffs are going to happen, but it's also about how are businesses and consumers going to react? And is there going to be a spending paralysis as a result?
Kelly, I love that you always take me back to 101 and help me understand. You say it in a way that I can understand, so I appreciate that so much. But hang on for us. I do want to bring in CBS News business contributor Javier David for more on what's happening. So, Javier, what are you thinking about in terms of the 15 minutes post-close, and what are you going to be watching for over the next few hours and days?
Yeah, I mean, it's amazing. The investor mood has really swung dramatically from euphoria to anxiety. We just came off the worst daily move in about 3 years. The markets are now at their lowest level since before the election. So, in other words, we've surrendered all of the gains inspired by Donald Trump's return to the White House. So, in one perverse sense, this is kind of what the Fed wants, because they want tighter financial conditions to take some of the steam out of the economy and curbs demand. But on the other, this move is starting to feel a little bit overdone. It's happening really quickly. But on the other hand, you cannot ignore the market's clear message. And I think, just said that. It's just tariffs, a softening economy. Everything is flashing recessionary risk at this point.
So I did ask what you're going to be watching for the next hours and days. I mean, if you had, I hate using this word, but I can't think of a better word for it right now, a panic meter, where would your meter be at right now?
I'd say on a scale of 1 to 10, I'd probably pace it at an 8.5, because I do feel like a little bit of this is overdone. But I'd watch bond yields. Everyone watches the stock market, but not enough people, for my money, watch what's happening in the yields market, and the fact that we were on the rise and now it's on the decline. And the fact that yields are falling so dramatically really does tell you that recession, that investors are kind of pricing in a downturn of some kind.
Javier David, thank you so much. And because CBS 24/7 is also a place for healthy debate, Kelly O'Grady, I think that you would have a different number for your panicometer. Tell us.
Yeah, I would say between a 5 and a 6.
Okay.
And so it's not nothing by any means. But look, I think that we've also seen major volatility swings back the other way. I go back to August. We had a terrible jobs report. The sky was falling. A week later, we had highs on the S&P 500 and other indexes. I think, to me, what is really important is that, yes, you are seeing these big swings, but you also saw over the past year, these tech companies have really high valuations. Talk to any analyst and they said, look, we are potentially going to see a swing back. It's a term that's called overbought, where people are just so excited about, let's say, the AI rush, and they pour money into these sectors. They pour money into these specific companies. And then it's not based on performance. It's based on hope. It's based on a term we like to call animal spirits. It's basically trading on vibes and hopes rather than actual data. And so, yes, I am with Javier that there is panic here and there is some anxiety, but I also think that you talk to a lot of analysts in the space, and this was an expected correction. At some point, we just weren't sure what the catalyst was going to be. And right now, the catalyst is tariffs and sort of the chaotic deployment of them by the administration.
Javier, any final thoughts?
Yeah, I mean, the market in a lot of ways was overbought. Like, we were kind of really frothy. No one will debate that. We do also, whenever we get to those positions, we need something of a catalyst to push us down or calm us down. But I think that the chaos and the uncertainty and really just the craziness of the implementation of the tariffs is really what's got investors really fearful here. And I think that that's the thing that investors need at this point. They need clarity. They need to understand what the end game here and when these tariffs are going to come off. Is this just a bargaining tool, or is this going to be something that companies and consumers have to plan for months and perhaps years to come?
Okay, Kelly O'Grady, Javier David, always good to talk to both of you. Thank you. We are going to take a quick break. You're watching CBS News 24/7.